The other days were pretty simple and basic. So um, today is definitely a very detailed day. So hopefully this will help you
Wait,
guys out. I don't know if we'll put it on the actual website. Maybe I'll just keep it like on Vimeo or something like that. But again, the website we want to make it a little more dynamic than just having one video. So it's kind of the idea.
how'd you get like the website running, anyways? Like,
How do you get to the website?
no, like how'd you
Oh,
get it running? Like who like made it and like.
so
It works, man.
it's in the works. Yeah, I mean it's not
Yeah,
like done, but like it's not
little by
real.
little,
Yeah,
different developers and
Twitter.
yeah, trying to get a bunch of people together to work on it, and then keeping it up and running is expensive as shit.
Yeah,
Like
how
you would think
expensive?
it's just, I mean, depends how much bandwidth you're using.
Yeah,
For something like this, you're definitely gonna need to run like a maybe 100 to a giga bandwidth on it 24/7. So you're looking at like 1,000 weekly.
What?
hmm
Damn.
God
yeah,
damn.
So that's why it hasn't. It needs to be like 100% ready before we actually put it out, and we're
yep,
scalping people that can take care of it as well. Maybe you know how you have those companies, the domain companies. They hold sometimes they do like bandwidth.
Mm-hmm.
So you're trying to fix it. Try to put as much data into a website without using too much bandwidth.
yeah. No, it's definitely not done, man. There's a lot of shit we want to do with it. A lot of it. Like we want to make it where it's very easy for you guys to like navigate through. Um, and the whole scheduling thing. I know we talked about it yesterday, but me and Victor will sit down today, and we'll definitely try to get that running too. That way, next week you guys can go ahead and start scheduling your one-on-ones and stuff like that. So, cool. It is 8:15. Yo, guys, listen. We're on to day 3. Thank you guys for actually like taking the time out of your day to really like continue learning. It's only going to benefit you guys as well. And not only that, but me and Victor go over all the time. It helps us because we teach it, so it's kind of like that information stays. It's very repetitive towards us, so it helps us as well as far as like refreshing our own minds, and hopefully it refreshes your guys' minds as well as far as detail goes. And a lot of you who all stayed up and watched GBP and all that good stuff last night.
Ugh.
Dude, not me. I went straight to bed.
Yeah, nah, GBP, man. A lot of the times, man, like if it's not, you had some like pullbacks, you had some drops, but you didn't have anything very
See,
defining.
I'll be on it yesterday and get a good profit.
Yeah. And
Nice.
that's what we're going to be going over today on how we can, instead of looking for reversals, like I was mentioning in the chat, I was like, don't look for just reversals, guys. Like, just because it's at at some high point, don't expect it to drop right away. Yeah, you are going to have some pullback, but really, if you're still stuck on the same trend, you should be only looking for that certain direction. So I think
Mhm.
we fail a lot in looking in for continuations as well. So
Yeah.
we'll be teaching you guys exactly how we maintain those trades. Whether if you're in an uptrend, instead of just looking for sell, sell, sell because you got really high in the market and you think it's definitely going to drop, a lot of the times that's not the case. You will probably catch maybe 30, 40 pips on a drop, but the bigger move is still a buy setup, right? So that's what we're going to be going over today. But so day 3, again, market movement versus price action movement, and we'll be going over sniper entries towards the end as well. But just a little, summary on market movement. Market movement is your overall trend. It's your overall structure, whether we're in a bulls market or we're in a bears market. That's based off of your higher time frames. Price action is basically anything below. I would consider it below the daily time frame. So, H4 time frame is going to be it's H4 time frame is like the one time frame that's stuck in between both sides. So your H4 time frame is going to allow you to really find those setups on a daily basis based off of price action movement. So if the market is pushing upward, if we're say for example we're on a downtrend on the higher time frames, right? If we're on a downtrend and we found a new lower low, okay? Now on the H4 time frame, on the way up to find our lower high on the daily time frame, that is just a bullish movement. It's not a bullish market. We're not in a bull's market. We're still in a bear's market based off of your overall trend. So you taking advantage of it on the lower time frames is just bullish movement. You're just pushing up higher to find that lower high on your daily time frame or your weekly, whatever the case is, whatever time frame you're looking at. I rave a lot about like the daily being your overall trend because you have more opportunity with that time frame. Now, the H4 time frame is really going to be your point of how the market is moving throughout the week. So you're going to be seeing, obviously, if you see like a lower low point on your daily, again, you want to wait for some sort of transition to happen on that H4, on that H1, on that M30, on the M15, M5, so on and so forth. But it all starts as soon as you see a level of support, right? Say, for example, you're seeing it in the past and you know, in history, you're seeing that there's a level being respected. Now, when the market is actually respecting that level, that means that on that higher time frame, you actually just found a strong level of support. So what do? You're not going to wait. I mean, yeah, you can. The safest way to trade it is to wait for that bigger pullback and look for that lower high to form on your daily time frame. But what if you can take advantage of that move on the way up until you see that lower high? So the way we do that is we start off by seeing that strong level support being respected, and then we go ahead and see the transition happen on those lower time frames. So those lower time frames, again, if you see a transition happening starting from the M1, the M5, the M15, the M30, the H1, and then finally the H4, you know that as soon as it transitions on the H4 time frame, you know that you're on your way up to find your lower high on the daily time frame. So that is like your last confirmation, your last time frame confirmation for you to continue taking those buys on the way up, understanding the bigger picture. The bigger picture is still downtrend, but you're taking advantage of those pullbacks. A lot of the times, man, like in the middle of the night, you know, right now GBP is very strong. So GBP, I think tonight it may even push up higher. I haven't really looked at the chart, to be honest with you guys, but I'll take a look at it. It will. Yeah, yeah. It will push up higher. Why? Because of the momentum it's bringing. Now, you know, had we just thought, oh, you know what, the market's actually going to reverse right off of here, and we're going to go in and sell, your account would have been wiped. You thinking that you must see a reversal? No, that's not the case. You have to understand your overall trend. And any point that you want to take a reversal trade, you need to see these lower time frames transition first to give you the confirmation. Now, if the market doesn't transition all the way up to the H4 time frame, now you know that you are still in a bull's market, right? You're still on the daily time frame. You're in an uptrend. You should still be looking for buys rather than sells. So that should be a temporary trade. That shouldn't be any no long term, nothing like that. If you were in a sell at a certain resistance or supply level, right? So that, taking all that into account, that's what we're going to go over today. Kind of give you guys a few examples on the whiteboard. So that's probably what we're going to start off with now. Hopefully, again, it's being recorded, so you guys can always look back at this. But as far as like the whole description, but let's go into the whiteboard and let me show you a few examples on how it should look like, a cleaner version of what the markets can look like. So let's go ahead and say this is our daily time frame, right? Daily, and we are coming from a we had maybe our higher low here, a higher high. The market then broke structure, and then we had our first lower high, so on and so forth. Okay, so on the way down, right, we understand that we just broke structure. We understand this is our break right here, and we're gonna go ahead and wait for, we have our higher high. We're gonna wait for our next low point to hit. Now our low point can be based off of, again, you got to look left, and always try to see if back test it, see if there was any areas where the market rejected multiple times. So on the way down, right, as soon as we find this level of support being respected, now on the way up here on the higher time frame, we want to see if we can take advantage of the market, of taking a buy opportunity till we find that leg of structure. This leg of structure is going to potentially be our next lower high. Okay, the way we go ahead and do that, we start off from this very point right here. And again, this is counter trading. Do we suggest it? If you with experience, yeah, you're more than welcome to trade these setups as well, because you're taking advantage of it going up and down, but you understand the bigger picture. Okay, now starting from this point here, we want to go ahead and start looking at perhaps, let's go ahead and look at the M5. A lot of the times I start off with the M5, the M15, then I work my way up to the M30. So what we want to see here at this point, we want to see the market do this. Obviously we're coming down, right? The market is pushing down. So it looks like some sort of downtrend, right? Obviously we're on a downtrend. And then we have our first transition. Now our first transition is, you can identify it on the M5. M5, look at that first transition. The transition happens when you have that minor break of structure. That minor break of structure is considered these lower time frames. Okay, so you're going to see the market break out of your last lower high off of the M5 time frame. You have your lower low, and then the market finally breaks out of your last lower high and breaks the ceiling, right? So what does that mean? That means that the transition is starting to happen right around this area here. And what we want to see is the market then push right back down, respect this level of old resistance, now new support, and then take off. If this happens on the M5, then go ahead and look at the M15. Okay? If that happens on the M15, look at the M30. If that happens on the M30, then go ahead and look at the H1 time frame. At this point, either time frame, you understanding that this is a very strong level of support and it's being rejected multiple times. If you see some wicks happening, anything like that, some sort of rejection, it's definitely going to reject. Then you can go ahead and decide whether you want to get in on an M5 or M15 or M30 or H1. But if you get in, say for example, you get in on the M5, okay? If you start seeing these transitions happen on the M15 and M30 and H1, you know that you're in this trade long term. Why? Because all the transitions happened from the lower time frame all the way to the H1. And then finally, if you see this same exact setup on the H4 time frame, you know that you're on your way up to find your next lower high. Okay? So so when that happens, right, you want to make sure that depending on your actual entry, a lot of the times, man, if I don't see it too clear on the M5, I'll go ahead and get in on the M15. A lot of my entries are based off of the M15, but I need to see this happen first. I need to see this transition happen first, finding your last lower high, your next lower low, and then having your first break. Go ahead and identify your higher high, and then identify your higher low. Okay? Now you know that you're on your way back up to find your next lower high on the daily time frame. Now, depending on your entry, as long as the market is maintaining, and I talk about this all the time, as long as the market is maintaining floors on the way up and they're not being broken. And what I mean by broken, the markets can come down and break this floor, but it doesn't necessarily mean it's been broken just yet. What you need to see is you need to see the market come down, retest, and then go right back down. If that happens, this saves you from your stop loss getting hit and you lose a lot more money. This is how you can, or you can just let your stop loss get hit. That's up to you, right? Because a lot of times, man, these markets can reverse right away, whatever the case is. But this kind of gives you a sign of the market, you getting in at the wrong side of the market. You probably weren't patient enough with the trade. So this kind of gives you an idea. But as long as the market is making new floors on the way up, you are still good to stay in that trade. Okay? And you can base these floors off of higher time frames if you want, anything higher than the M15, maybe the M30, maybe the H1. As long as these floors are being maintained, you are good to stay in these trades. Now, as soon as you see this happen, let me see. As soon as you see this happen, perhaps maybe, you see this where you have your first broken floor, right? And not only that, but you have you have a higher low, you have your higher high up here. and then you see the market coming right back and retest it, and then it follows through, right? Maybe if this happens on the M5, the M15, then the M30, and the H1, you know that you are actually finding a level of resistance, which now, as soon as it transitions on the H1 time frame, you know that your last confirmation for this transition to happen is on your H4 time frame. So when you see that happen on the H4 time frame, you know that you just made your new lower high. Okay? And then that means you should already probably be out of this trade, to be honest with you, this buy. Okay? And that means that this is the original move that you've been waiting for to get in on a sell, to continue the overall trend. But what we're teaching you guys right now is taking advantage of both sides, rather than obviously this would be more of a scalp, like Victor says, this would be more of a scalp, but this gives you more opportunity, man. This gives you a little more of like breathing room as well, as far as like looking for your trades rather than looking for these overall setups. This can take days before you find this setup happening. I don't know if you guys noticed, but a lot of the times, man, like if we find a counter trade, we know the overall trend. We know that we're still in a downtrend, but a lot of the times it takes days for the market to push up to a certain level, right? And then the market just comes right back down. That means that, we found our leg of structure. Our leg of structure is very important because that's going to give us that bigger trade rather than staying in those counter trades. Is everyone following?
Yeah.
Yes, sir.
Yeah? All right, cool. So, and in a lot of ways that you can see this happening, this lower high forming, is either just, again, looking into the past, looking at the past. A lot of times the markets, whenever you have a break of structure, the market comes back to that break. When you had your last higher low, the market will come back. Or identify an impulsive move, like Victor was talking about yesterday. Identify an impulsive move based off of a higher time frame, because a lot of the times, man, those are your targets. Those are like your overall targets. These will keep you in your trades long term. So in this example here, once you find these transitions happening and find your lower high, now your target can be either an impulsive move down here that you identify down here, or you can just base your target off of your last low point, because obviously you want to see this market push down lower and find a new lower low. Okay? So once we find a level, you see the market stalling at a certain level here, and then you're like, wait, why is this stalling? What's going on? Okay, same thing, guys. Go ahead and go back to look left. Look left, see if it lines up anywhere. If it does, cool. Now you should start looking at this transition happening again. Look at the transition happening from the very bottom. If all these time frames transition, you know that you're good to go into a buy, because you're looking for your next what? What are you looking for next?
High.
A next high, but what kind of high?
Low high.
A next low high, exactly. Oh shit, what the fuck? There you go. A next low high, exactly. So, and then based off of here, right, you go ahead and line this up. A lot of times when you have these lining up, perfect. You have enough confluence. Confluence means you have enough reasoning to start looking at this setup. But on the way up, again, you took advantage of the market going right back up until you see this transition again happening right here. These transitions, I'm going to show you guys on your sniper entries. This is where you're going to see those transitions. You're going to see these are going to be your opportunities to go in long term on these trades on a sell. So that's the concept, guys. The concept is for you to find these transitions on these lower time frames and take advantage of a counter trade and then the bigger trade. Okay, that way you're taking advantage of both sides. But again, I mean, this comes with experience. You guys will have a bunch of information in front of you. There's a lot of detail in the markets. Just don't get faked out, guys, because understand your bigger picture. Always understand your bigger picture. Don't get faked out. Again, you could be having just a descending trend line. Shit like that. That's going to give you enough reasoning to stay in these trades, or at least take these trades, right? So, again, another thing, a channel, right? You could have some sort of channel going on. Something that gives you a reason to start looking at these setups. But once you find these setups actually playing out and you see that they're actually testing these areas, start looking for these transitions. All right, let's go ahead and go into an actual chart. You guys understood this, right?
I got a
Yeah.
question on the on a downtrend. Does your lower high usually match up to your previous high or low?
A lot of the times, yes, but when it doesn't, it means it's looking for the last impulse move. The impulse move is your supply and demand. Is where where the markets like to they like to come back to these areas of aggressive moves. And what we mean by that is those Marbusos that Victor was talking about was those strong candles, those strong pushes. The markets love coming back to these areas, and I'll show you an example of those on the actual chart. But yeah, you can. A lot of the times, guys, like if I'm waiting for a lower high to happen, right? If I'm waiting for some sort of setup, can you guys still see the whiteboard or no?
Yeah,
Yeah.
we do. Yeah, we see it.
Oh, okay, cool. Shit, but I think let me see. Okay, whiteboard. There we go. All right. If a lot of the times, if I'm
Hey,
waiting for a
Scribbles,
lower
man.
high, what I like to do is I like to put an alert on Trading View at this price level here, which is our last high or low. So if the market comes all the way back up here, it's gonna alert me. Hey, you know what? You just hit this price level. At this point here, if on Trading View, if I see it and I see that it's like showing up a bunch of wicks, a bunch of wick action like that. All right, cool. Hey, you know what? It's testing. All right, let me start getting on these lower time frames, and let me see if I can get in on a some sort of minor break of structure, wait for the retest, and then get in. A lot of the times, man, and just set your stop loss and forget about it. Set your stop loss, forget about it, and just let the trade play out. All right. That's a lot of times, man. That's what you need to do. You just need to just watch it play out, dude. A lot of times, it's not gonna happen right away. Sometimes it does. With GBP pairs, you guys will fucking hit your target right away. But and make realistic targets, guys. Like don't if you want to work on your accuracy, don't shoot for 200 plus pips in one trade and be like, oh yeah, fuck yeah, I'm gonna get me 200 pips, and like, and like, you know what I mean? Just narrow it down, dude. If you hit, maybe you don't have to hit it like put a take profit. Maybe you could just watch it. If you're watching your trade in front of you and you're up 30 pips, all right, you know what? I'm gonna move my stop loss, break even, cool. Let the trade keep riding. If you're up 60 pips, all right, I'm moving my trade, my stop loss in profit of 30 pips. All right, now you just collected 30 pips. They're locked in. They're secured. You're good. Now at that point, you can start shooting for those 200 pips if it continues going your way. But realistically, from the very start, you should just have a realistic target, guys, so you can help. So you can improve your accuracy with these trades. Trust me, whenever you're hitting every single take profit because you're hitting 20, 30, 40 pips, you feel good about it. You're like, oh shit, damn, dude, like I've been grinding this shit out and almost all my trades have been hitting take profits, right? It's a good feeling. It really is. And morally, it's a really good feeling. So yeah. Do you guys understood that though, right?
Yeah.
Yes, we do.
All right, cool. Right on. All right, so let's go into an actual chart and let's see if we can find some sort of setup. Let me see. All right, let me get out of here. All right, cool.
That's pretty cool. Like if you can get advantage on the both movement, like in the pullback and
Both
the
sides.
real trend,
Yep.
with just one pair, you can make your goal in just 1 week, like over than 150, easy.
Yeah, exactly, dude. See this setup right here, guys. All right, so the setup
Jesus
right here,
Christ.
this is a weekly zone, a weekly supply zone. Okay, so this is something to really, really watch out for tonight. Now, do I
Yeah.
think it's gonna drop immediately? Maybe not. It's
Nah.
gonna take its time, kind of like it did right here. You see how it rejected 3 times before it went right back up. You can expect the same thing tonight. You can expect some consolidation where the markets look very confused, where it's just shooting up, it's shooting down, shooting up, shooting down until you finally have that drop. Now, my overall target on a sell, like if I was to take a sell, would be this point here. You could have your first option be here or this one here, right? But a lot of the times, again, if you identify it on the 4-hour time frame, the impulsive moves happen. There's an impulsive move right here. There's there's another impulse right here and another last impulse here. So really depending on what the markets want to do, I mean, you just have to be very alert with these. So
The impulsive move that you're looking at, are you generally looking at for the daily or the 4 hour?
yeah, hell yeah. The 4 hour will tell you a lot more, dude. Like the 4 hour is gonna help you out so much, and I've been adapting the 4 hour for a lot of these setups. So, all right, let's cool, fucking hell yeah, USD CAD actually hit. All right, let me go ahead and delete all this shit here. We don't need any of this.
Scribbles.
Scribbles, yeah. Well, I mean,
New
this
Zealand.
is more like a setup, man. Like,
What we waiting for the USD CAD is going on the downtrend, right?
USD CAD, I think we were overall. I think on the monthly we're still. Oh god damn it! All right, let me hold up. I can't see shit. All right, let me go ahead and delete everything. All right.
USD CAD, that's an uptrend.
Yeah, uptrend. Yeah, monthly we're still uptrend. Weekly we're still uptrend as well. Yeah, your last higher low point was this one here, higher high. So the market's working between these two areas. We're still uptrend on the USD CAD. All right. So let's go ahead and identify a quick setup. This setup here, right? We broke structure right around this area, and this is actually a perfect setup. So this is gonna be really nicely, easily explained as well. So we have our higher low, right? We have our higher high. The market then finally broke out of this last higher low, and we found a level of support right around here. Okay, and we're gonna go ahead and identify, see where in the past this level was actually tested, and see if it's a strong level. And sure enough, you have multiple areas here. You have them testing here, tested there, and some overshoots where the market then reversed. So yeah, this is definitely a good solid area for us to base our analysis off of. Now, when you see this happen, right, we understand that we just shifted from an uptrend and we have now shifted into a downtrend. Now, obviously, we want to see our lower low, right? We come from a higher high, our lower low, and we want to see a new lower high to continue the actual trend. But what if we can take advantage of this move going right back up? Because for us to find this setup, it is going to take 1, 2, 3, 4, 5, 6 days for us to see this drop to find our lower high. And Josh, this is that impulse that we were talking about. When you see this happening, when you see especially on the daily time frame, when you see the market consolidating sideways like this, that means that this is a rally, a base rally. So the markets like to come back to these bases or this base and then drop again. So this is price action. This is those aggressive moves where obviously banks reversed the price here, and then you had a bunch of retailers like us who joined the trend and pushed the market lower. But in here, the reason the market
wait. But that base, those bases is where the support with this. That supply was, dude. Drink some water, bro.
My bad. Shit. Yeah, I know. My bad.
What's the line, bro?
Listen. On the 4 hour time frame, you'd be able to really see it. On the 4 hour time frame, you're gonna see more of a sideways motion. All right, you see that. This is the highlighted area on the daily time frame. Okay,
so the base is what creates a support.
Yeah. Okay. Exactly. There you go. So the markets like to come back to these areas, and you see them a lot more often than not, and you can identify them really easily on those higher time frames like the daily, weekly, and monthly time frames. So that's how I've been basing my targets off of my trades, my long-term targets. That's how I got the GBP targets to hit. All those GBP pairs hit not only that, but they correlate with each other. So they're obviously all three of them were going to go up together. But those targets were identified based off of daily and weekly and monthly time frames. All right, so going back to this area here, let's go ahead and break it down. All right, we want to go ahead and see that the market respected this level of support, and I want to see what it actually looked like on the H4 time frame. So I'm going to go ahead and just draw a line there. Go. Let's go red. All right, and let's go down to the H4 time frame. Okay, perfect. So, like I explained, once you see the market coming down to this area here, right, we understand that it respected this support area. Now, on these lower time frames, I'm sure I'm not going to be able to go all the way back in time with these lower time frames, but somewhere down here, we see that perhaps the market definitely did something like this, where we were on a downtrend, right, and then we finally broke, respected, came right back up. Okay, that's exactly what happened down here. Now, if all the time frames are correlating with each other and they're actually transitioning the way that we want them to transition, like this, we want to get in on an M5 or M15 sort of time frame because we're getting in at the very bottom of the actual market. Now, if you're watching your trade, right? If you're watching your trade and you leave it open, you just set a stop loss, forget about it, and this happens on the H1 and H4 time frame. The H4 time frame is the last time frame that it happens on. When you're going to have that transition, you had your last ceiling right around here. You had a break and you had the market retesting. Do you see that? As long as the H4 time frame is maintaining these floors on the way up, we are good to stay in this trade long term. We're good to stay in this trade long term until you see that break. You see that break on the H4 time frame?
That's the time for closing.
What does this look like on the daily time frame? What does that look like?
It's like a bearish candle.
It's one big bearish candle. Yeah, this whole setup is like a bearish candle. But what did you just find on your daily time frame that you were looking for?
Another roof, another resistance.
Another resistance, yes. But another high, but what kind of high?
Lower, like
a lower high. Yep, you found a lower high. This setup is your lower high on the daily time frame. But what I'm trying to get to, again, let me see if I can get down to the H1 time frame and really identify that area. Hold up. It should be able to let me. There we go. Okay, now the H1 time frame, look at how more detailed it really is. The H1 time frame, obviously you just have a really big strong rejection. It looks like maybe this was like Sunday because it opened up as a gap and then the market finally closed that gap, right? And you guys know about gaps. Gaps are really easily traded if you catch it from the very beginning. Because a lot of the times the markets come back to these areas and close those gaps. So when you understand, right, we're still on a downtrend. We're on a downtrend on the H1 time frame here. We have our lower high, lower low, lower high, lower low. And so our last lower high point was this area here, but this is all ceiling. This is all ceiling here. We can count this as the same thing. That's fine. As soon as you see the break, you see the break happening right here. All right, you see that break happening right there. Then you wait for the retest. That retest happened right around this area, started taking off, so on and so forth, came right back down to retest that same area, and then took off. That's when that transition happened on the H1 time frame. Now let me see if I can get down to the M30. Let me see if it actually lets me. Oh yeah, there we go. Nice. All right, now we're into a lot more detail. More detail. So you see how much more detail we see? In this case here, whether you would have waited for this break or you could have waited for just a simple break of a ceiling. Something like this. Understanding that this level of support is a strong level of support. This is very strong. Sorry, shit. God damn.
God damn.
I know, man. Fuck. Because I went jogging, bro. It's cold as shit out. So our last, shut up, man. Our last floor happened right here. Did the market ever push down anywhere near this floor down here? Did it?
Yep.
No, I mean, did it after here? Like as soon as it hit here, did you see it anywhere on the right side come close to hitting this floor down here?
No, anyone. It's a bigger one on top.
No, so yeah, I mean the market never pushed down lower to this point here. It never did. What it did was it maintained this floor the entire time. You have lows here, you have lows here, and you have a low right here. Now, if you notice, this last floor was being respected multiple times, okay? That last floor was being respected. And when you see this happening, man, a lot of the times, man, you understand this floor is very, very strong. So what happens is now that it's being stuck in this like sort of like sideways motion, you see a lot of the sideways motion. As soon as you see a breakout like this, for example, you have your first break of a ceiling, right? Your first break. Nowhere did you see breaks anywhere around here. You didn't see any break of ceilings anywhere around here. You saw the market finally break a resistance level here. The market then came right back down, retested, right? Retested and then took off. So really, on the M30 or M15, I'm sure the M15 looks exactly the same. You're going to be able to get in perhaps on an entry somewhere on this rejection right here. So let's go ahead and call that to be our entry based off of the M30 time frame. Go ahead and keep that green. Let's put dashes. So so now on the if this is your entry, your stop loss should be somewhere, I don't know, somewhere below around this area, okay? Maybe you could keep like a tight stop loss. This is 63.49. So let's go ahead and keep it at maybe 20 pip stop loss. Boom, 20 pip stop loss. You're already in. Nowhere did it ever come back to this area again. Nowhere did it ever come back to this area again. What it did, Craig, I'm gonna go ahead and mute you real quick. All right. I'm gonna mute you. All right, cool. All right, so if you got in around this area here, do you see the market pushing right back down to this area or anywhere close to your stop loss? Do you see that or no? No, right? It never came right back down. So what does that mean? You have a floor right here that was definitely maintained. You have a floor that was maintained right here. And you see how the market, if I extend it out into the future, you see that the market maintained this floor right here. You see that, how it just retested?
So all of those retesting can be future entrance for us?
Yeah, these can all be entries, dude. These can all be entries. As long as this floor is being maintained, they are still considered good entries. All right? What you would need to see, again, for these sort of like, this is more of a confident sort of trade. If you were to take this one because it rejected it, you would get right back in. But the safest way would be to see this break again. This break of this ceiling, this retest, get in. Okay, that's another safe way to get in. But had you seen this floor being retested from over here, you are good to stay in that trade, man. And if you extend this into the past as well, you see how like it rejected over here. You see that?
Yeah.
Yeah, this is all a valid support level. It was once resistance, and then it acted now as support. Exactly. And then once you do that, man, once you're carrying your floors, right? Once you understand that the market's only pushing up higher, then you're okay to continue keeping your floors in check. All right? You could have had this floor over here, right? But you know that the markets have to come back down. The markets they do push up higher at certain times, but look at how it came all the way back down to this level here. You see that? And then it actually rejected. So yeah, I mean, you could have gotten in on a trade here. And had you seen a break of your floor right here, had you maintained a floor here and you saw the break, at that point, your stop loss should be somewhere all the way over here. And your entry still down here. So really, whether you would have had a break of a floor, you could either get out right there, that's fine, or you could stay in it because your stop loss is still maintained. Your stop loss is still good. Do you understand that?
Yes. When you make multiple entrants, would you play with the low as well or not? Like a different entrance, you make a bigger low or not?
Yeah, I mean, wait, what do you mean? Like you're
Like for example, if I'm getting entrance on the beginning, right? For example, I'm going with like and a half of the one low. So in a bigger like in the second entrance, I can change my low and put like one low or two lows and get advantage on it. Or
yeah, of course. No. So check this out. I guess I think I understand your question. Had you gotten in right here, this should probably be your biggest trade. Okay? This one down here, because this is the very bottom of it. Now, if you get in on an entry right as soon as you get in here, this is your second entry, this trade could be scaled down a little bit more. So what I mean by scaled down, you have more risk of this trade going against you than you have this trade going against you. Okay? So you're more at risk of the second trade going against you because of how high the market has pushed up. So if you catch an entry at the very start of this transition, this trade should be a long-term trade. These other ones, if you get in here, right? These are more these are more temporary. More scalp, exactly, more scalp, because you're stuck in a counter trade at the moment. You understand this is a counter trade until you find your bigger trade on the daily time frame. So so understanding that, right? as long as you're maintaining floors on the way up, as long as you're maintaining them, you are good to stay in these trades, guys. You're good to still stay in these trades. Now, let me see exactly what this looks like on the H1 time frame, because this break of a floor, it should look different on higher time frames. Right here. Yeah, so it looks slightly different. But you know, a lot of the times, man, like when you're in a trade anyway, when you're on a if you get in on a lower time frame trade, what do you guys actually stay on those lower time frames and look at your trade, or do you guys just zoom out to like the daily or H4 time frame and let the market do what it has to do?
So actually,
Yeah.
in my personal, I just look in the daily, try to identify the trend, and I go in lower to find my entrance. But if I see they against me, I use close the trade. Depends how many pips I already have.
So okay, so do you see this this line? This was based off of the M30, right? That was like our break of a trade, or of our floor, right? Now, had you maybe zoomed out to the H4 time frame, you see some sort of break, but then do you see this candle here? This candle here, right? That's not really a decisive candle. That's not telling us that this is going to push down lower. It's a tested candle because of the long wick. Now the following candle happened to close bullish. Huh?
We can call that one a hammer as well.
Yeah, that too, exactly. So now, seeing the bigger picture, seeing the higher time frame, psychologically, you can stay in these trades because it's maintaining floors. Again, like I mentioned, as the last time frame to transition has to be the H4 time frame in order for you to change your overall way of trading the market, whether you're in a buy or in a sell. You need to see the H4 time frame be the last time frame to transition. And what I mean by that, you need to see the market push down lower than this low to continue its downtrend. Okay? In this case, the market did not push down lower, and it just created a new higher low on the H4 time frame until we, kept going right back up.
And that big wick on that bearish candle told me is it keep going up.
Yeah, exactly. All signs of it keep going to continue going up. Exactly.
Now, most of the times people getting scared because before he closed, you see like a big bearish candle. So mentality, you can play like, oh, it's gonna against me, but you gotta waiting for they close for see what's gonna happen next.
Exactly. You that's one thing that I don't mention too often. You guys have to wait for these candles to close. Wait for these candles to close, and just watch the market do its thing. It's not gonna happen right away, but you just have to let the markets play out. Now, this entry that we got in on the M30 time frame looks like we got in. I think it was either this candle. No, it was definitely this candle here. My bad. Definitely this candle here. That's where we got in. That is our entry, and that's what it looks like on the daily time frame. So it looks like we got in almost at the very bottom. If you would have gotten in on the M15, it would have been a little bit lower, I think. But regardless, that's a damn good entry. Okay, so let's go.
That's almost 200 feet.
Yeah, this should be like if you would have stayed in from the very bottom, 150. That's still pretty damn good. So
that's pretty good.
So let's go ahead and go back down to the M30. Let me go ahead and break this down one more time and show you exactly how you're going to see that transition happen on the higher time frame, so you can be ready for that. So going back to this, right? We highlighted this. This is that one candle that has, I have no idea. That one candle that on the H4 time frame you saw like a hammer candle, right? Where you had like a long wick. This is that area there. Okay, that was that fake out. On the H4 time frame, it looks like a fake out. So we're gonna go ahead and continue our floors going right back up on the M30 time frame. That was based off our entry, and sure enough, we start getting to around this area here. Okay, now if I extend this out into the future, let me go back to the daily time frame and extend this into the future. We have right into the future here, and we see, let's go ahead and color coordinate that to red. That just means sell. So we want to go ahead and see that, and then not only that, but we can go ahead and add a zone. Let's go ahead and add a zone based off of this area here. So we have the top of the wick, the top of the body, and just extend it out into the future. And let's see what it actually looks like on the M30 time frame once we once we're like, we're definitely in the trade and we see some sort of transition happen. So, all right, we're here. And boom. Okay, so as long as we're maintaining floors, we keep going up with these floors until we get to this area here. Now, once you see this happen, we reached a really strong level. We reached a zone. What does this zone mean? This zone is based off of the daily time frame. All right, now we zoom out. Now we take a bigger picture and we're like, all right, cool. So this trade, you know what? We're around this area. I think I'm good. I think I'm good to either get out of this trade, or you can wait for some sort of confirmation, and that confirmation is that solid break of your last floor. Okay, that transition is going to happen on those lower time frames leading up to the M30, the H1, the H4, so on and so forth. So when you see that happen, right, this is your last floor on that M30, that last solid floor. Sorry, let me go ahead and, here we go, right here. You see the break, you see the retest, and then you have a strong ass candle right after. That strong candle tells you that this entire area has now transitioned on the M30. Let's go ahead and see what it looks like on the H1. The H1 transition should have happened right here after this break of this last higher low point. Okay, so you had your transition here in these candles here. It already transitioned on the M5, it already transitioned on the M15, it already transitioned on the M30, and now here this is where you have that transition on the H1 time frame. Now on the H4 time frame, you're going to see it a little more obvious too. So the H4 time frame, the same exact thing. You have that break, that solid, strong candle, so on and so forth. You know that you just made your lower high on the daily time frame right there. That is the setup that you've been waiting on for six days, 6+ days, and finally it started reversing. So had you stayed in these trades from the very bottom and carried your floors and getting into trades the entire time until you see those transitions happen, you would have profited the entire way going right back up, gotten out of all of your buy trades, all of your buy sort of bias, right? Your mentality of just getting into buys. Now you're looking for your sells. Now the sells, this is where you can get in on a bigger lot size. Again, like Victor mentioned, this is more of a low risk, high reward sort of setup. Why? Because this is what you've been waiting for the longest. Okay? Do you guys understand that?
Yeah. So on that point, I definitely gotta close the buy and looking for the sells.
Exactly. Yes. So once you see these transitions happen, right? You see that this last break right here. Say for example, you're looking for a sell opportunity, and what I mentioned a lot of the times is wait for a break of a floor. If you're looking for a sell, wait for a break, a retest, and then boom, get in. So your entry should be this pullback right here. Okay, so let's go ahead and mark that up to be our entry point. Green, right here. That's that exact rejection right there. That should be our entry. I'm gonna go ahead and bring it down so you can see it a little bit on the higher time frames. So when you see that, not only that, but if you notice, this is our last high point, and then the market did not make a new high point after that. You had a lot of rejection. You had a lot of wicks, a lot of wick action here. This is telling you that this zone is a strong zone where we can start looking for sell opportunities. Okay, so when you see that happen, now you can add a few other things. You can add, maybe go down to like the line chart and see if you can add maybe some sort of descending trend line, right, to kind of give you more of a reasoning, more of a confident or psychological sort of feel where you can take a sell opportunity. You have a descending trend line just like that. Now if we switch over to the candles, you'll be able to see a clearer picture. Rejection, all these wicks rejected that area. Sure enough, you see the break of the last floor. The market retested, boom, dropped. Now let's see what your entry actually looks like on the daily time frame, and it should look pretty nice. Go ahead, we're gonna get rid of that. That's your entry right there. You see that?
That's what we call sniper entry.
That's a sniper entry right there. Now, if you were on the M5, I'm pretty sure you can get in somewhere up here. I'm pretty sure. I'm pretty damn sure you can get in somewhere up here.
I never used that time frame before.
Yeah, well, consider it. I mean, just look at the transitions happen first. Now, if the M15, maybe the M15 you can get in somewhere here in the middle. But actually, you know what? Let me try. See if I can actually scale it down to the M15. Let me see if it lets me.
And the M15 that's the ones that are looking for the enter. But I never go down for 5.
Hopefully it does let me. That would be cool if it does.
I can put it right. I can try. Why not?
Oh, nice. All right, word. All right, so let's see if I can get in on a better entry on the M15. All right, so we can consider this to be some sort. You see this sideways motion right here, right? That sideways motion we can probably play out with like a box technique. A box technique is when you have like the sideways motion. You wait for either another retest, get in, or you wait for the break, retest, and get right back in. So you see how it actually broke out of it? Okay, we found a level of support here, right? Then the market came right back up and retested that same exact box or that same exact line before it dropped again. So that retest could be your actual entry based off of the M15. And let's go ahead and mark that up. We go ahead and mark it up to be right there. That could be our entry based off of the M15. And let's see what it looks like on the daily time frame. Should look on that a lot nicer.
Right.
Boom, right there.
Almost on the
almost at the very top of that wick. So getting in right there, man, like your risk is so much more how would I say it?
Lower?
You can have a tighter stop loss. You can have your stop loss can be based off of 25, I would say, maybe 45. That's 25. That's 20 pips right here. That could be your stop loss. And you're in, dude. You're in long term. You would have caught this entire move going down.
Ooh, that's over than 400.
Yep. And you just move your stop loss as you continue getting more pips. So that's how you maintain your trades. That's how you look for transitions. That's how you can take advantage of counter trades, so on and so forth. And then your overall bigger move, which can be a potential almost 400 pips off of that move.
Yeah, but how many people are actually holding for like, what is that? That's almost like 2 weeks.
Victor,
Yeah.
I'll be honest with you.
But
When I get
200,
I'll be out.
Not only that, bro, but you get in on a trade here, you can get in another trade here, you can get in another trade right here, you can get in another trade right down here. You carry your trades, bro. The closer you get down to this market down here, the more risk you're going to be taking. But if you can catch the transition from the very top, why not just drag it comes down to your mental state. It comes down to your psychological sort of trading. It's like, can you keep this trade open long term?
Holding is a hard part.
Ask yourself, can you hold yourself with this trade long term? How can
Probably
you do
not.
that? Drag your stop loss, man. Just drag it and just fucking let the markets do what it do. Now, he brings up a good point. How many of us can actually do that? Personally, can I do that? Can I hold this long? I haven't. I'll be honest with you guys, I haven't. But that's the idea. That's what I'm trying to teach you guys is something that you guys can grasp and you guys can practice on your own. You guys can practice that. If you get this down where you're swing trading, bro, trust me, your trading is a lot less stressful. You can catch the bigger moves because you've tested your patience. But I could tell you guys this all day. I could tell you, hey, you could hold all these trades, but it comes down to you at the end of the day, right? It comes down to you how long can you hold these trades, understanding your bigger pictures, right? Understanding what the markets are actually doing. But hey, man, again, this is something that we can teach you so you can adapt towards and just make that your trading style. I mean, at the end of the day, it comes down to you.
I was gonna say something because on that movement, it's gonna mean that you gotta hold it on the closing market and waiting for the market open again. That's something in my personal I'm getting scared because when the market open, anything can happen, and can like you can lose what you already have. So I will waiting until Friday, and on Friday I will closing and waiting for another chance by when the market open for getting in again.
Yeah, absolutely. Um, but that's the idea, guys. That's the idea. The idea is to hold your trades as long as you can, to profit as much as you can, and keep adding your orders. Understanding that you're on an overall downtrend. Why aren't you taking advantage of more sells on the way down, right? So, yeah, there you go. What Victor just wrote. Swing it to 25K. We can do it. Hell yeah. Oh shit, you got into US 30. Damn. Nice.
No, that's like 2 days ago, bro.
Hey, that's fucking awesome, man. That's what I'm talking about. Like you guys
you know how hard it is to keep trades open?
I know.
No matter how. That's why when Ariel says about the position, like what I recommend is what I told you guys yesterday with the supply and demand. Open like 4 or 5 positions, and take profit. As soon as you see, I don't know. Let's say you do a 1 lot, and let's say you see you're already up $100 in all of them. Take one for you.
Yeah.
Take one for you. You already made $100. Who cares? And then let the other 3 ride. And the next 3, as soon as you hit your first take profit, move your stop loss to break even. As soon as you hit your second take profit, move your stop loss to your first take profit, and vice versa. And that's the only way you can swing. Because if not, dude, that shit gets to you, man.
Yeah, no, you're right. You're absolutely right, man. That again, this is something that will definitely require practice. But if you have your technicals on point and you understand the bigger picture, man, there's no reason why you can't do this. There's a lot of opportunity in the markets. Like you guys, again, understanding the bigger picture. And I mention it all the time. Using the higher time frames is going to help you out a lot, man. A lot. So this is how you maintain your trades. Do you guys have any questions on this? Do you guys understand this?
Makes sense.
We got listen. We got enough people in here. Does everyone understand this?
Yeah.
Yeah.
Sure.
Cool.
Sure.
But yeah, that was just a little breakdown on how detailed you can get in the market. Look for your bigger opportunities, your bigger trades. How you can counter trade. How you can actually go with the trend, and take advantage of every opportunity you see in the market. Oh yeah.
Oh yeah. That video in, boy.
Damn,
Yeah.
he didn't even tell us that he was recording, man.
Nope. Nope. Nah.
Hey,
Yeah, hey.
Cheers, Vic.
That's a quick lawsuit right there. In my eyes.
Cheers.
What you drinking on, man?
Adios.
What's
bring
up,
it out the Bombay.
Oh yeah. No, I mean I still got some. That
Okay.
dry gin is alright, but like, but yeah. Hey
Bombay?
guys, this was.
Sapphire?
What's up?
What are you guys talking about? Bombay Sapphire?
Yeah, Bombay. I have some here.
That's like gasoline, dude.
Kind of. Any questions on this? Did you guys understand the counter? How we got into a counter trade to look for our bigger trade?
We got it.
You guys
Mhm.
understood that?
Yep.
Now, my suggestion, guys, is take this into back test it. You can back test it by just a lot of times just go in a random chart and just break it down from the very bottom here, break it down from the very top here, and do your technicals. Just like obviously, if you don't have the replay option, like the bar replay, it's okay. You can just back test it by eliminating everything here and just look at how did this setup break out? How did it start continuing going right back up? What were your confirmations to take multiple trades? Break it down, man. Over the weekend, I suggest you guys really, really like whatever you took from this week is put it into a chart and just start analyzing, man. Just start analyzing, start back testing, start looking at what happened in the past. That way you can start getting familiar with patterns. You start getting familiar with like how the markets are moving on a daily basis. And not only that, but we're going to have a webinar tomorrow, right? We're going to have a webinar tomorrow, Thursday night. If you guys, I was going to ask you guys, and I'm hoping that everyone comes on because I want to see what you guys really took out of this. I want to see what, like, if you guys actually learned from this. So every single one of you, we're 12 of us in here right now. Bust out a chart, or at least 10 of us. I'm sorry, 10 of us. Bust out a chart and tell me, describe a setup for us. Describe a setup. If you're down here, how did the transition happen? What were you looking for? And what sort of what leads you to think that you were gonna take a who out there drag raising and shit?
Over here, man.
Is it homework? No, it's not. You guys can do it. You guys don't have to do it. But anyone who wants to break down a chart for us, you're more than welcome to, and we'll tell you if you did it right or wrong.
How you see the market right now from that pair? If you wanna,
we have this pair pushing up. I think it was based off of our weekly time frame. We have it pushing up. Yeah. Yep. So USD CAD has the potential to continue going right back up, and if not, it could be the start of this impulse here, right, where we have, this, it could come down and retest this before going right back up. So the idea is still uptrend on USD CAD.
all right.
So we'll see what happens.
It broke structure.
Yeah. It maintained. If we go ahead and bust out our zones based off of the weekly time frame, this is what they should look like. We're stuck in between this range here and this one right here. So the market could do whatever it wants to do in between these two zones until we break out of either one of them. All right, but the daily is telling us that we are currently downtrend on the daily. We would just have to see, again, bust out the zones on the daily. It should look the same exact way. So we have our last higher high point and our last lower low down here as soon as it broke structure. So we're stuck in between these two zones. Now, on the H4 time frame, the H4 is going to help you out a shit ton with really seeing price action movement. Okay, so you can be stuck in between these two zones right here until you see some sort of breakout as well, and then you can continue actually seeing the market do what it's supposed to be doing. So, god damn.
What the hell?
Whose fucking chair is that, fam?
Thought I was muted. Fuck.
WD-40 works, bro.
You gotta put some WD-40 on that, man. What you doing?
But yeah, so this is how you can take advantage of that, man. The H4 time frame is going to help you out a lot. The market can push up right now. If the market was to push up higher, our target could be based off of this low point before it then dropped. So this could be, or the start of this impulse right here, something like this. This could be it. Something like that. This is Victor's analysis. Like this is what Victor's charts be looking like. I like it though. It's simple as shit, but I'm starting to adapt into that as well.
What, the spaghetti? That looks like kindergarten scribbles, bro.
Shut up, man. But hey, it helps.
Whatever works for you, man.
Yeah.
Whatever works for you guys.
Exactly. Absolutely.
As long as you guys are making money.
Yep. So.
All right. So what we have US CAD doing right now?
USD CAD, where we left off at, it looks like, this was this morning. We saw the big drop this morning, right? So we can see the market actually pushing up a little, slightly higher, I would say, somewhere to around this area, and then dropping again in the morning again. Dropping again.
I'm looking at the weekly. Give me a second.
Dropping again to at least this zone, this fresh zone right here, which has only been tested one time. And then after that, maybe perhaps seeing the bigger picture and coming right back up to this zone up here. Oh shit, what the hell? Something like this.
Because I see like a kind of two floors right there.
Yeah, it's not pushing up any higher, especially on this H4. You don't see any new highs. You just see new lows. I think it'll do the same exact thing. It'll come right back to around this area tonight. Tonight it likes to move right around. It likes to move to the opposite way of how it's actually going to move in the morning. It's Thursday morning, so is there any news in the morning that you guys know of?
I think that happened already today.
Oh, it did.
I think so. They had their NFP today.
Yeah. No, wait, NFP? No, they didn't.
Yeah.
Let me see. What's today? Today, okay, Wednesday. Tomorrow, Thursday.
Oh, what's today?
What the
Was
fuck?
it today or tomorrow?
Oh, Wednesday. Fuck shit.
No, they had it yesterday then.
Thursday at 6 a.m. Yeah, we're gonna have some USD
No,
news.
they had their NFP yesterday. Today, this morning.
What are you talking about? Oh,
Canadian NFP.
Canadian. Gotcha.
Yeah, we're talking about the Canadian pair, right? The Canadian dollar.
Yeah, Thursday we should have some news with the U.S. dollar. So the U.S. dollar could be affected. So we may see the U.S. dollar. What is the DXY doing? The DXY, is it strong? Is it?
Let me see.
No, it's like
Oh
it's
no!
going
Oh no! It
down.
actually dropped.
It's dropped.
Damn. All right, so yeah, I mean, even on the daily time frame, you broke structure. Yeah, this is your last high-low point, higher high, broke. So the U.S. dollar could be weakening, especially in this morning or tomorrow morning. So what does that mean?
Actually,
Like euro dollar is on the uptrend.
Oh, it actually just hit supply.
No, the U.S.
The
so okay,
the
so
dollar.
Let's go ahead and break this shit down.
The U.S. dollar. Oh yeah.
Right. Yep. We'll see what happens,
yeah.
but I think USD CAD will push down a little bit lower today or in the morning.
I don't think so.
No.
Oh wait, what?
The USD CAD pushing down lower in the morning
before retracing. I see it coming. Wait up, I'll tell you right now. I'll tell you the exact level. I think. Fuck.
Because the dollar is really big.
It would have to, if it's gonna push any lower, it would have to break 131,426. It looks like it's been retesting a level of support at let me see, 131,874. So it probably bounce off of that, or you can probably create a channel between 131,874 and 131,426.
So you
mean,
say
depending on the news.
Yeah, so you have it coming down to this area here. That's what you're saying.
Yeah, I have it coming down to that area.
Yeah. So in the morning, yeah, I think it will come right back down.
Before it shoots up.
Yeah. Yep. Yeah. So you're right idea. Makes sense.
I think euro dollar is a good chance for getting a buy right now.
What?
Wait, what?
I'm gonna sell. I've been holding that stuff for like 3 days.
Oh, that shit played out really nice too. Yep. But yeah, any questions on everything we just covered? Victor, we should go over like the website shit today, if you have time.
Yeah, that's fine.
But any questions on anything that we covered in the last 3 days? Anything you guys you may be a little confused about? Oh, look at that! Damn, both targets got hit, and our monthly target is still pretty valid. So.
Ooh, go to ENCD. Oh yeah.
Currently looking for a new. Yep, it happened.
All right, guys, check this out. Don't miss this. Okay, go to the monthly.
Oh yeah, live trading. Let's go.
Don't miss this. Around 179. Right? Go closer. Around 170. Around 170. Where Ariel has that red line. I don't know what that red line means.
1.78.
Yeah, I have it at 179. I have it from
Yeah, bro, but that's gonna take days though.
Bro, shut up. I know. Listen.
All right.
It's gonna hit that area, okay? Put a sell limit in 179 and open like 10 positions and just let it ride. That's
Damn.
or open like I mean, if you, I am so positive it is gonna come back with a crazy rejection because it's like it hasn't been at that level for a long time. So
Where is this
telling you,
damn red line coming from?
I don't know, dude.
I don't fucking know.
You tell me. It's your chart.
I don't
But
fucking
yeah,
know.
I open like 10 positions and just take all the profits. Let it ride. Let it ride because it's gonna come down to 160.
Wow. Wow.
I mean, it's gonna take a couple. It's gonna take a couple
Wow.
fucking.
160.
Yeah,
God
it's gonna
damn,
take a
fool, you
couple
have
of
it
days.
pushing all the way down here?
Huh?
You have it pushing all the way down here?
Actually, I have it pushing around one where you have the 155 down, go down. No, up.
155 when the two
Right there,
like
that base. You see that rally and that base that happened around there.
Wow.
I mean, that's swing for you though. That's what I'm saying. Open like 10 positions, so you see the profits. Boom, 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 boom.
Alright.
Follow.
Alright.
One by one.
Well, I'll make a live account then. I'll be back.
Yeah, man. It's been since like let's see, when was this shit? Last year in October. That was the last time it hit. It's about to hit again. Look what happened. Yeah, it hit once. It came back to 163 last year. So just just make some money, dude.
Hmm.
Alright, well.
And then Euro GBP. What it's if it pushes down. I mean, I have a weekly weight up.
Alright, well,
It's
I'm
it's
looking.
right.
I'm looking for buys on GBP at some point tonight.
Yeah, do that for sure. Actually, you know what? Wait up, because I think go to Forex Factory. You have somebody supposed to speak tomorrow on
Oh yeah, 2:30 a.m. Yep. I think this. You just been
You
having
gotta.
some like crazy push to the upside, like on the daily. You see it.
Well, yeah, because remember, the only reason it was down was because Theresa May failed to do the Brexit. But
Yeah.
now with Brexit being, in the works, I think it's Carney and Boris are supposed to speak tomorrow.
Yeah.
So just be careful. Just although sterling is strong, doesn't mean that it's not gonna respect the supplies that you already have, because
Yeah.
any economy can have a short-term loss. Okay, so like you see Ariel's monthly target here. No matter how strong the GBP is, it's still gonna respect your monthly target.
Yeah.
Okay, and it'll be quick. You're not gonna get as much pips as you would if there wasn't any news coming out. But I mean, money's money. You're still gonna get a couple pips. Let's say if you would on a move like that on a monthly target, usually that's when you hit the 200-300 pips. Maybe you only get 100 pips, but I mean, 100 pips is 100 pips.
Good,
Listen,
yeah.
listen. I think this. If it does respect this level here, you can expect it to push right back up. If it hits that monthly target by tonight, because if this fucking skyrocketed, if it does, look for a big fucking sell off right around here to respect some of these levels here. But we're still uptrend on GBP pairs. It's just look for a big fucking drop as soon as it hits this monthly target here. And this monthly target, you can, if you guys want to, either remember it or whatever, 1.92166. That could be just watch that. If it does reject this level here tonight after 2:30 a.m., that's when the news come out for my time. Your time, anyone in the eastern side, that will be at
3:30.
That would be at 4:30 a.m. 4:30 a.m. for you guys. Anywhere in Pacific, 1:30 a.m. So just watch it tonight. If you really want to see what happens with these pairs, watch what happens tonight. If it rejects here, look for a buy opportunity to continue going right back up. So be careful with these GBP pairs, man. They've been moving up pretty strong the last few days. So
Oh yeah.
yeah, if you would have caught it from down here and just fucking,
Let it ride.
I would say
Jesus
just fucking let it
Christ.
ride and then just take some opportunities here, like quick scalps and shit like that. But because you have your bigger entry down here, but unfortunately, man, sometimes we either missed a bigger move and we try to get in on these areas on the way up. So um, just be careful with it, but just watch it. If you guys want to see it, watch it.
For sure.
Cool.
And be careful trading it.
Oh yeah, absolutely. But any other questions, guys, before we do get off?
Yo, I got one real quick.
Yeah. What's up, man?
So I'm a little like it's a little I don't know really what to do when it's like a chart consolidating like on support or resistance because there's one like my GBP JPY it bounced off my 15-minute support like 5 times and it just keep bouncing on it. But I keep noticing that on a lot of like other charts.
Yeah.
What do you like kind of think about those? Like usually when it keeps testing the same spot, will it eventually break through, or is that kind of like it'll eventually drop?
Do you see this right here, the sideways movement?
Yeah.
Okay, when you have a lot of this happening, as long as it's not breaking floors, like I mentioned, support levels, then this is considered a continuation. This is what I was talking about. A lot of people would say, hey, the market's reaching this level, we're fucking selling it, right? Because it's consolidating around that area. So a lot of people expect this is gonna drop right after it like tested this area multiple times. But you have to be careful with it, man. Like as long as it's maintaining, as long as it's maintaining these levels of support, you still understand you're still in an uptrend. So you shouldn't be thinking about sells as far as like your bigger trade. You should be thinking about your buys as bigger trades. So when you think of that perspective, this area here is only a continuation pattern. Okay? That's all it is. So that's why it shoots right back up. So be careful with that. This floor right here has to be maintained. If we see it pushing down lower, then we can probably expect it to drop. But if it's maintaining, right, which is based off of the 1 hour time frame, if it's maintaining this floor, then you're good to think of a buy opportunity. It's not making any new lows, it's making new highs. Okay, until you find a new high. So if you see a lot of the sideways motion, some like this too, this is how it looks like from the H4, and you can see it on the H1. There's another sideways motion right here, right? And it just keeps going right back up, Is respecting levels of support. All right?
So would you say getting into a buy at the very, very bottom of that where it's testing would be like a pretty good setup?
Yeah, absolutely. You could, yeah, hell yeah. How would I say it? When you think of a sell, it's really a buy. I don't know if that makes any sense. When you think of a buy, or when you think of a buy, it's really a sell. So this is how we get caught up from like not getting faked out in the market and everyone thinking, oh, it's definitely gonna drop. No, man, this is just a continuation. This is the market doing what it does. Again, GBP pairs, man. They like to, when you start understanding how a currency moves and you study it almost every day, you can expect the same kind of moves at the same exact times. Obviously, it'll do one thing at a certain time, and then after a few hours, it'll do the complete opposite. So this entire area here on the 1 hour time frame, this could have potentially been, the start of London session. As soon as it started taking off, that could have been 7 a.m. after New York session opens. This is probably what happened. So, just be careful with that, man. Like, just, if you see a lot of consolidation, sideways consolidation, a lot of the times that's continuations. Those are continuation patterns. All right? We get so stuck in the idea of we have to sell it. We have to catch the reversal. We can catch the reversal if we're on the right side of the trend. That makes sense to me. But if we're trying to always look for reversals, then that's when we get caught up in getting stopped out, where the market went against us. It's because, man, we're not trading with the trend. We're trading against it every single time. Do you guys ever get that feeling of like, oh, well, it definitely got to this point, it has to turn around? Do you guys get that a lot? Yeah, absolutely. So you have to think of the bigger picture. Think of, just be patient with the moves, see the bigger picture, and see what the markets are actually doing. And again, trade continuations. Don't just look for reversals. Look for continuations. this, this is an example of a continuation. Had I seen, if I'm looking for a reversal, obviously I want to see this happen. I want to see this happen, right? Where it starts it just reverses, right? It gets that nice clear picture reversal, but this level is being maintained. So let me always think of the bigger picture. These levels are being maintained. Okay? As long as we're maintaining these levels, we're still looking for those continuations. Cool?
Yeah. Got it. Cool. Thank you.
Word. So again, tomorrow we'll have the webinar, guys. We'll have the webinar. Anyone who can make it out, I think it's gonna be cool. We're gonna talk about like what happened in the markets this week. We'll go into a little more detail with like GBP pairs, stuff like that, since we traded pretty heavily. One thing I think I know we've mentioned that we want to start like the webinars on Sundays. If there's we'll put out like maybe some sort of poll or something like that where everyone can vote on a pair, where we can all keep the same pair in our watch list and just like trade it together. You know what I mean? So ooh. I think that would be cool. I think that would be cool for all of us, where we can all keep up with one pair and just always be like, hey, you know what? This pair, I think this is happening, and we can all get into the same trades with that one pair. What's up, Enrique? Go ahead. I like how you can.
Wait, what?
I like how you can lower your hand. What does that mean?
Oh, I don't know. I pressed it like a long time ago earlier. Oh. I don't know what the fuck it did. That's fine.
That's cool. Anything else, guys? Are we good?
Mm-hmm.
Word. What'd you guys think, man? What'd you guys think of the updated version? What'd you guys think of, fuck yeah. What is like your guys' honest opinion? Those of you who took the course earlier this year, what do you guys think of like the updated version?
I like the updated version a lot because I think what I got from it the most is a lot more clarity when trading between pairs. Like an issue I have is patience, of course.
Yeah.
And I look at things a lot like a more of a scalping view, even though I'm jumping into like a swing trade. I get impatient.
Yeah.
It's happening. I don't look at the previous low, the previous high, wherever it is, to understand where I'm supposed to be trading within, and I just jump into it.
Yeah.
And I fucked me over, of course. So I think with this gave me a lot of clarity to look at, okay, what bounce am I going to look at? When am I going to actually look for a trade to look for an entry to jump in and explore that patience? You know what I'm saying?
Yeah. No, hey, that's cool. That was the whole point, man. To get what the fuck Scout. Yo, shut the hell up. Fuck GN.
My bad, bro. Damn.
No. He's talking about like me and shit. Like he knows I like to scout, but yeah. So no, I mean that's the whole point, man. Was just to give you guys like a better picture, a better perspective of how the markets really move. I think we talked about it. I think day 2 or day 1, not sure, but there's so much detail, bro. It's so much deeper than just putting in lines and zones and stuff like that in trading. It's so much deeper than that in trading, bro. Like in the markets, and when you start thinking in that certain, you have that mentality of how like the markets actually really move, then your whole perspective changes in the market. So that's the whole point, man. That was the whole point, the whole updated version, and I'm glad like you guys all attended like the refresher course, because obviously you guys want to keep learning. We can put out as many webinars and we'll start putting out more market outlooks, but when it comes down to it, man, if we're constantly giving you guys these refresher courses, I think it's going to help you guys out a lot in the long run. So maybe I was thinking maybe once a month we can do it. I think that'd be really helpful for everyone. Yeah. I think that'd be really cool, because as me and Victor also like continue trading, I start learning more like new things. I start learning a lot more things. So it's something that we can provide for you guys. So
I really like the idea of sticking to like one pair as a group and like looking at it, because it gives me a lot of consistency.
Yeah.
I would tend to have like the shiny object syndrome where I jump to another pair, and I wouldn't really see the movement and the action that's happening in one pair, right?
Yeah, absolutely, man. Hell yeah. Anyone else who took the course at the very beginning, what'd you guys think of this one now?
This one is pretty good. It's a little